Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly demand and support area and rejecting it to the upside. In fact, from here, multiple rejections to the upside have been created. Every single time that the market tested this zone, it rejected it to the upside. And just a few months ago, once again, the market tested the level, started rejecting it to the upside. So in a situation like this, looking at the market from a monthly standpoint, everything seems quite bullish, and we could expect more potential bullish continuation to be created away from this level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. We have a market which has just tested and rejected to the upside quite important weekly structure. In fact, this zone here was acting as previous weekly support, against support here, then the market broke it to the downside and started acting as resistance here with the creation of this red candle. Then the market broke back above the zone, and once again what we know is that previous resistance, once it gets broken to the upside, becomes support. So the level once again started acting as support here, again here, with the market testing it and rejecting it to the upside quite aggressively. So from a weekly standpoint, everything seems quite bullish as well, and we could expect to see more potential bullish continuation. Now, dropping down on the daily time frame, what do we have? Here on the daily, what we can notice is that we have a market which has just created a quite massive impulse to the upside, followed by this start of a correction. And in general, from a pattern standpoint, when you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 0.32, 50% and 0.618 retracements lining up perfectly with this previous level of structure. In fact, if we extend this zone to the left, we can see how this was already acting as structure in the past, with the market stopping exactly at this zone and creating all this move to the downside. Then again, the market tested its zone here, acted as resistance, then it got broke to the upside, started acting as support, then the market broke back below the level and now has broken back above and is heading toward the zone once again, which right now should be acting as support. Now, since we have both Fibonacci levels and this horizontal structure both lining up in the same area of price, this actually means that this is a confluence of support area, instead of which you have multiple layers of support in the same zone of price. So when you have a confluence of support area, what you would expect is to see more institutional longing inside of that zone, which at that point would further increase the probabilities of a potential rejection to the upside away from the level. Speaking about institutional longing, let's go in fact and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing on USDCAD. Well, the first thing we have to keep in mind is that if we're looking at the data for the CAD, we're actually already looking at CAD USD, because all currencies on the spot are traded against the USD. So since we want information on USDCAD, because that is what we're analyzing, we simply have to reverse everything. And what we can see here is that net positions with the last report went from minus 863 all the way down to minus 53.3k net positions. This shows how a huge amount of shorts are getting added from an institutional perspective on CAD USD. And in fact, we can notice how institutions have increased their shorts from 37.9K all the way up to 88.1K. So if institutions are shorting CAD USD, they're actually longing USD CAD in order to short CAD USD. So this means that institutions are massively longing USD CAD. And keeping that in mind, if we move back to the technical side of the market, we have to remember that inside of a confluence of support area, that is where we could expect even more institutional longing. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also in the description, so you never miss new updates. Now, back to the analysis. As I was saying, this area could see even more institutional longing of USD CAD, further increasing the probabilities of a potential push higher. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift inside of this area from an intraday bearish to a bullish market, at that point, I definitely wouldn't be surprised if we get a rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.